This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today I'm here with Jake Ryan, author of Crypto Asset Investing in the Age of Autonomy. Jake, thank you for joining us again.
Paul, thanks for having me here.
Great. Can you give us a recap about your background?
Yeah, let's see. I came from a technical background. I got a degree in computer science and spent the first 20 years of my career doing custom software development. I started a consulting firm out in the West Coast in Santa Monica. I had a concentration in school in artificial intelligence and had published a paper that got 700 Google Scholar citations. And then, really mostly spent in software development. In about 2014, I started to do early stage and seed stage investing in equity, venture capital and in equity. In 2015, I started to invest in my first few blockchain companies. And that again, still equity, seed stage. And I think about 2016, I started to buy Bitcoin. I think my first few Bitcoin were like $455. And so in 2017, I wanted to make a career switch. I had a lot of passion in investing. I had a lot of experience in venture style investing. And I had a big background in building systems. And so I started a crypto fund in 2018. And then recently have just had a book out this December called Crypto Asset Investing in the Age of Autonomy.
Great. Well, I've been reading the book and enjoying it greatly. It did a good job in describing the history of monetary theory and the challenge with fiat currencies, and then looking at the what drives the short-term and long-term economic cycles. But I'm now to the crypto asset investing part of it. Can you describe for the listeners, what is your investment thesis for the book?
Yeah, I think the first part you alluded to, which is that the shortwave economic cycles are typically driven by those 5 or 10-year credit cycles. But the longer economic cycles are driven by technological revolution. We've had 5 in the past 200 years. Carlota Perez has a great book called Technological Revolutions and Financial Capital about that history. And she was doing work that was built on top of Joseph Schumpeter and Kondratiev back in the 20s and 30s. What's interesting now is that I think a new long wave cycle has begun. We've seen evidence in the past decade that automation has begun. We see it everywhere with AI and IoT and robotics, but it's not transformational. It doesn't just alter how business is going to get conducted. The last piece of that puzzle was cryptocurrency, and it's because we can store, process, and transfer economic value without human intervention. And so as these 4 technologies converge, companies are going to be able to build autonomous operations. And businesses that do not have autonomous operations simply won't be able to compete with those that do, because autonomy is the ultimate competitive advantage. And so our interest and our investment thesis is that most value is going to accrue in this new public financial infrastructure that is going to drive the decentralized and the new digital decentralized economy. And so that's where blockchain and crypto assets come in.
So you talked about the 10-year cycles and which is short term, and then the longer term cycles driven by the technology. Where are we in those cycles right now?
Yeah, so over the past 200 years, I think we started with the industrial age, in the 1700s and 1800s. And then we had electrification, I think went on in the entire electrification of buildings and grids. And then we went to railroads, I think kind of in the early 1900s. And these are, again, 50-year cycles, 50, 60-year cycles. The last one was the age of the internet, and where we saw just analog communications and paper communication being digital or electronic. In my opinion, we're in the maturing phase of that cycle. And some of that evidence is looking at just maybe the FANG stocks compared to the S&P. You can just see they are in their golden age. They are investing and really getting a lot of money per investment dollar, and they're just absolutely outperforming. And so I think we're in the end age of the age of information, and we've begun that new age, what I call the age of autonomy.
And so what inspired you to write the book in the first place?
Well, I really loved Carlota Perez's book, and I loved her framework. And then I've been following the Austrian school of economics, where there has to be a cost to printing money. And ultimately, if the cost of production of money, if there's no real cost of production, if you can just push a button and have $1 trillion more dollars, that is going to get manipulated at some point. And we've seen that time and time again in history. And so at the intersection of these economists, I really saw something with crypto assets coming into the foray. And so I wrote an article on Hacker Noon, I think in 2018, called Crypto's Role in the Age of Autonomy, I think it was. And I thought it had legs. I thought it could make a book. And so I had, I think 2 other times, tried to get a book deal and failed. And so this was about my 3rd or 4th year in trying to get a book deal, different topics. But I finally got a deal. I had 2 offers, one with Wiley, one with another. I took the Wiley deal. Yeah, I was really excited.
You think the timing of it made a big difference? The market coming to a place where blockchain is coming out with real applications and the monetary system starting to show even more strains than it has before? Or was it just your persistence?
I started to write the book in late 18 and mostly started to write in late 19. And I mean, who would have known how much has changed from November of 2019 to now? I mean, with the pandemic, with everything, with how the Fed has responded, I mean, it couldn't have been written out better. So luck or skill, I don't know. I'd rather be lucky than good any day. So I think I got lucky.
So who's your primary audience you're targeting?
I want to look at somebody who's technical or an investor, somebody who's been curious about crypto assets but don't really know why. I want to give them the why there's so much value here. I mean, I think we've done a good job of explaining the idea of a store of value and why Bitcoin has value. I think we've done a somewhat mediocre job explaining what smart contracts are and what the value of those are. But we've only come at it from the context of financial capital. We're talking about trying to mimic traditional finance in a decentralized world with collateralized loans, exchanges, insurance, and things like that. And I think there's a bigger, more compelling story to tell, which is the idea of production capital. If you think of the agrarian age and production capital being farms and livestock, and the industrial age being factories and raw materials, and the age of the internet being domain names and intellectual property, we have a new set of production capital that really is going to be used by every single business and really transform how the world's conducted all around. So I think there's just a massive transformation that still people aren't quite getting their hands around. And I hope to tell that story through this book.
Well, that's great. And so how do you think readers will benefit from reading the book?
I think part 1 of the book gives a good basis of economic theory. Part 2 of the book gives a good understanding of Bitcoin and blockchain, why those are valuable, and the entire age of autonomy thesis. And ultimately, I think people want to know how they can apply that. So part 3 of the book is how to invest in crypto assets. I want to give readers an idea of a few frameworks on how to think about where value might be accruing. 98% of crypto assets are worthless. And so how do you find the ones that are going to accrue value over time? And I think this book gives a few frameworks to figure out where the value really lies.
And what was the most important takeaway you found from writing it?
It was the first time I've been able to put a whole thought together in 88,000 words and really tell the whole story. So it feels good to get that thought expressed. I hope it makes a difference in people getting into investing in crypto.
Well, it's great. I deal with a lot of startups and look at business models every day. And of course, the recurring revenue model is one of the best ones that are out there, especially if something built and is sticky and is not easily changed. And I've always been wondering, what is the next stage after just a recurring revenue SaaS business? And when I read it, I thought, well, that's the answer, an autonomous system. Because not only are you putting some software in place, you're putting a whole network in place that is continually running by itself. And that is the ultimate stickiness. You're never going to take something down that's running well in order to replace it with something that's just 2% better. You're going to only replace it if it is greatly different. And so I thought this is going to be revolutionize startup business models, because this is the new gold standard for investing in a business, is if they can actually build something with autonomy built around it.
I agree. I mean, we're going to have part of the new production capital is we're going to have a new formation of how people group together with an investment goal or a production goal in mind, and to be able to govern a blockchain as they want to achieve their goals. That could be akin to a corporation, right? It's the same but different if it's decentralized and run entirely in the crypto networks sphere. What's interesting about building something like autonomous protocols, again, one of the advantages you get in crypto networks are they're permissionless. You don't set up an account and then ask for permission, and then you may have to get KYC'd or do some of that to get your money in, but ultimately you don't need permission to use these smart contracts. And so you're able to build autonomous protocols that run forever. And the interesting part is these idea of governance tokens, where ultimately the people that hold the governance tokens are the ones that can govern the blockchain. If they want to take 10% or 20% of the cash flows and distribute that into the token holders, they can vote on that and do that. And so this is going to be a new form of something that is equity-like, but something totally different, and a way to govern and control and get exposure to cash flows. And so building these are going to be incredibly valuable. I suspect in the next 10 years, somebody will build an autonomous protocol that will be valued much higher than any factory that's ever been used.
Well, and so how did this book change the way you think about early stage technology investing? Where are you putting your investments in the future?
Yeah, I like the liquidity of the coins and tokens over early stage venture. I think venture is good and it serves its purpose. But with crypto investing, the projects are coming online earlier, so you aren't getting as much value. You're not going to get 1,000x return from a small investment in seed stage necessarily, because these are coming to online faster. You can buy into those networks earlier and still get a lot of the upside. So the risk reward profile is a little bit different. You have to factor in when you can get liquidity. So I think that's important. One other thing is just the idea of store of value, which I think everybody's pretty familiar with. We've heard about hedges against inflation and Bitcoin and how that can be a store of value. Over time, if you're talking about long-term investors, a store of value is a logarithmic function, right? So as you get more and more of the total store of wealth, you can only have all of the store of wealth. And so it has a cap to it, which is the amount of store of wealth. In thinking in it long-term, what's interesting is anytime you are building companies or building cash flows, that is more of an exponential curve, right? There is no cap. If you can continue to build things and generate more and more cash flows, that's an exponential function. So in thinking about decades, you're going to want to have exposure to store of value, but you're going to also want to be investing in things that are generating cash flows. And so that'll be important if you're a long-term investor to not just stick with crypto assets that are focused on store of value.
So does accruing value actually put it on the same scale as Moore's law?
It could be Metcalfe's law, right? These are network goods and have network effects. And so Metcalfe's law really does apply here.
Okay, great. And so the investment thesis is that you describe here, that's in your fund, is that right?
Yes, I run TRADECRAFT, and it's a macro thesis-driven fund, multi-strategy, long biased, but really fundamental and systematic. So we outlay in the book what our investment thesis is, and it really is around these autonomous protocols.
Well, great. So what do you plan to write next?
I need a break. Yeah. I tell you, it was fun to write, but writing under a deadline, that's hard. I mean, I think next time if I were to do it, I would write the book first and then bring it to the publisher. So, but I have an idea of an advanced version of this book.
Oh, looking forward to it. Well, in the last few minutes that we have here, what else should we cover that we haven't?
Yeah, I mean, I think we've done a good job. I hope people see the opportunity and at least this has piqued interest. And if so, the best thing an investor can do is just really educate themselves. That's really what I'm up to, is helping people educate themselves into this new market. Investing in innovation is really where asymmetric returns can happen. So it takes that conviction in the innovation before you can really invest in it. And so if we can get more and more educated on it, I believe more people will be investing in innovation like this.
Great. Well, how best for listeners to get back in touch with you?
Let's see, through my site, ageofautonomy.com, or I'm always on Twitter at TRADECRAFTJake.
Great. We'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Great. Thanks all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.